If you're a beginner in Forex and you're feeling overwhelmed by everything online, this video is going to simplify it and show you step by step how to set everything up the right way so that you can get started without feeling overwhelmed. Now, when it comes to trading, you want to know what it is you're trading. And we have a lot of commodities, metals, indices, and just regular Forex currency pairs. As you can see through the list, I'm scrolling. And all it is two currencies against each other. One of them will be a lesser value. One of them will be worth more than the other. And that's how we will make our money buying and selling these currencies. Now, when it comes to whether you should buy or sell, that's when we get into the technical analysis of it all. But for the simplicity of this video, I'm just explaining to you guys what a currency pair is and what it actually means when you're wanting to trade one. That means that you expect one to be more or less than the other. When it comes to movement, these pairs can move in ticks or pips, and that's just the value of what you're going to make. Now, some of the things you're going to need to start trading, number one is a broker. If you're located in the U.S., my broker will be listed below. If you're in a different country or something like that, you will have to do your research and do the research so you know what's the best broker for you, okay? And the second thing that you're going to be needing is a platform that you can chart on. TradingView is one of the number one charting platforms in the world. I'll also leave a link below for that for you guys. But basically, you want to use a charting platform that allows you to chart on basically anything that you think you might want to trade, along with going to different time frames. Anything as low as the weekly and anything as high as the weekly and anything as low as the 15-minute is a good charting platform, in my opinion. You also want to choose something that allows you to make alerts, allows you to change the candlestick patterns. Not patterns, candles to what you would like them, whether that's just regular Japanese candles or Hakanashi. And then you also want to have the ability to mark up your chart. That's the whole reason that it is called a charting platform. So you want to choose something that allows you to make all the necessary markups so that you know what your chart is, reading, along with adding indicators. The third thing you will need is a simple Forex strategy that tells you, how you're going to be getting in the trade, the direction. You want to know your entry rules, and you want to have your risk management in order. A lot of the reason traders fail is because they don't take risk management serious. And you also want to have that final checklist so you can know you checked everything off. Okay, you guys, I'm going to show you what this looks like on a chart. But first, I want to go over the lot sizes so we can get an understanding of ticks versus pips. Now, we're going to be looking at gold, which is a metal, and we're going to be looking at USD JPY, which is just a regular Forex currency pair. So, on USD JPY, for each pip, it's a 1-to-1. Now, on XAU USD, which is gold, each tick is going to be 10 pips. Okay, so just keep that in mind when I'm explaining this chart at the bottom to you guys. So, let's just say you enter in USD JPY at a 0.01 lot size, which is 10 cents per pip. So, for every pip, you're going to get 10 cents. For every 10 pips, that's going to be $1. Now, on gold, when you're looking at that, it's going to be 10 cents for every pip. And I'm saying pip just to keep this simple, but it's a tick. So for every tick, it's going to be 10 pips in that tick. So for every pip, you're going to get $10. So, yeah, you're going to get $10 for every 10 ticks. I'm sorry. It'll be $1 per tick and $10 per every 10 ticks. Okay? Now, from a medium position size, let's just say you enter in at $1. $1 on USD JPY. For every pip is going to be $1. For every 10 pips, it's going to be $10. Now, when you're looking at that on gold, it's going to be $10 per every tick, which is 10 pips in one tick. So it'll be $10 per every tick. Per every 10 ticks, it'll be $100. Okay? Now, on USD, JPY, XAU, USD, for large positions, let's just say we go in, and I'm sorry, 0.10 is $1 per tick. And then 1.00 is going to be $10 per pip or per tick. Okay? So just to keep those lot sizes in mind. So for every for every pip on USD JPY, that will be $10. For every tick on XAU USD, that's going to be $100. So for every 10 ticks, that's $1,000. And for every pip on USD at $10, it would be $100 for 10 ticks, because now you're in at $10 per pip. And I hope I made that make sense, but I'm going to show you guys on a chart, and we'll see how this all adds up and how you can see how there is a big difference between how much you can gain or lose when it comes to ticks and when it comes to pips. Okay, now you guys, I'm just going to be showing you this so that we could look at actual movement on a chart to hopefully make this all make sense. I was confusing myself when I was trying to explain it to you guys, but I think I got my point across and that the point was understood. So the green line is going to be my entry point. The pink line is going to be my stop loss area. And then I'm going to place one more line on the chart so that it can be my target profit area, which is the amount of pips that I will gain in the trade if it does go in my direction. So from 5,000 to about, let's just say 5,400. So because we're looking at gold and every tick is 10 pips, that's going to be 4,000 pips that we would have the possibility to make on gold. So with gold moving 4,000 pips, if we were to go in at a 0.01 lot size, that's 10 cents, we would make $400 per each tick. If we were to go in and put a 0.10 lot size, we would make $4,000 for each tick. And if we were to go in at a 1.00 lot size, we would make $40,000 for those 4,000 pips. Okay? So that's with gold. Now I'm going to show you guys this on USD JPY. All right, so we'll look at this on USD JPY. Again, you can see I've put my take profit in place, which is going to be that red line. We'll call that 157. And you can see I put my stop loss in place, which is that pink line. and we'll call that 154. And I've put my entry in place, and we'll call that 155. So on USD JPY, that's going to be about 200 pips. So if we take that and look at that 200 pips at a zero point 0.01 lot size, we would make about $20 for those 200 pips. If we looked at that on a 0.10 lot size, which is $1 per pip, we would make about $200 for that trade. If we look at that on a 1.00 lot size, we would make about $2,000 for those 200 pips. So that's just the way that gold and USD can move and how they can differ in what you stand to make per trade. Me personally, I like to trade gold because you can make much more, but you can also lose much more. So that's why it's important to keep in mind your risk management when making trades, because that is the main reason traders fail. And we don't want to be a failing trader. We want to be somebody who gets in the market and understands their rules. So you shouldn't risk more than 10 to 20% per trade. You won't fail in trading because you're not a good trader. You'll fail in trading because you over leverage. You risk too high. Your risk goes from low to high to extreme. You hit a certain amount of trades and you think you're on a roll just to give it all back to the markets. Don't be that trader. When you trade like that, that's when you get into things like emotional trading. Emotional trading makes you have FOMO. You revenge trade, and then you have greed because you feel like you're entitled to have a winning trade. But the market owes you nothing. So keep that in mind when placing your trades. Have a plan. When you don't have a plan, it creates chaos in your trading. And you don't lose because you're a bad trader. You lose because you have no structure. You have no discipline. You have no will to wait for the trades to come to you. Trading is not a casino. Don't treat it like it's a gambling game. Don't risk too much. Don't overtrade. Don't trade emotionally. And if you do all that, 9 times out of 10, you will be in the top percent. For anything I mentioned, check out the description down below. And if you like this video, subscribe for more, because in the next video, I'll be going over actual beginner trader strategies so you can go from just the basics to actually loading up your own broker account and placing your first trade.